Welcome to a capital hungry, higher time frame analysis and swing trade ideas webinar on GBP USD. So we're going to be starting from the quarterly time frame as we're still only like 6 days into a new quarterly period being Q2, as well as the new month of April. I want to start projecting some potential long-term investment and trade idea opportunities if the conditions arise for us to potentially make some money and execute on, as long as the current macro fundamental sentiment of optimism stays strong. But of course, if we do have any long-standing fear, uncertainty, or doubt to cause reversals on the global equity markets or on our risk currency against safe haven pairs, we'll also identify what we would need to take long-term reversal trades as well, technically and fundamentally. But as of right now, if you guys have already watched the higher time frame gold webinar or the GJ webinar, you know that there's a higher probability market optimism will still continue stronger as we've had an overall flood of vaccine headlines, economies start to slowly open back up, continued support of the central banks for their respected countries and markets, and of course, a lot of the fear, uncertainty, and doubt from COVID-19 being digested and priced in early on March 2020 when it first had its major impact on the markets. So I just want to start here on the quarterly chart, dissect some of the market structure, some investment concepts like buy low, sell high, very basics that we can see probably play out here as well, and some potential areas of interest alongside price action and everything else as we start to map out some trade ideas. So the first thing I want to identify is a very common theme with our risk currency and safe haven pairs. We can see the downside move we had during the 2008 financial crash, and specifically because we're trading the British pound. You can also see during the 2015, 2016 period, the Brexit impact as well. And as I was talking about how this pandemic seemed a lot more strategic, surgical, and precise in the sense that this was the 2020 pandemic impact and recovery. Almost within 9 months, you saw the entire crash and recovery take place, right? So we can still see that those fundamental macro catalysts had a major impact on GBPUSD, and even the smaller impact financially that the pandemic had, similar to like GJ, is still very prominent here and very evident. You can see we actually did create new record lows, but what we love to look at in Capital Hungry is where the actual candle bodies close, because it shows us a lot about the buyers and sellers strength. And you can see it closing above this zone where previous candle bodies have failed to break below or close below since 2017. We end up snapping right back above that level at this very, very strong demand zone. So since that point, you can see that here was the catalyst of the 2008 financial crash. Here was Brexit. Now we haven't had really any fear, uncertainty, or doubt fundamentally here, as we technically reached a retest of this bearish market structure. We do want to be very mindful of where we're starting to show some rejection and exhaustion now. But if we still have continued market optimism, and especially with the US dollar, when we're looking at the US dollar standalone, if the Feds are signaling they're going to keep interest rates low and they're still going to be injecting the US markets and printing out more US dollars and increasing the money supply, and they say, don't worry, inflation's under control. Yeah, like, all the headlines that we see and I send to the trade room from the Fed speakers, when they say comments like interest rates won't be going up anytime soon, there's still a lot of room for financial support, right? We're not too worried about inflation as they keep printing more of the US dollar. These are all comments that they're going to keep the stimulus plans and the monetary plans as is. So we still might see a continuation of a flood of US dollars in the market, where that oversupply of US dollars would actually decrease the value of the dollar. So when we're trading the dollar against other currencies, we can use this to our advantage. So just that from a macro fundamental perspective. If the Feds are going to continue to print out the US dollar for financial stimulus for the citizens, continue of the government bond purchases, so money for the government, continue to flood the markets, and we have a weaker dollar standalone when we're looking at the dollar index. Once we clear this area to the left from a technical perspective, there's a lot of room, even to these areas of interest, which is 1,000 pips up, and a lot of room for correction, similar to GJ on an optimistic run to the upside, right? Because if the market climate fundamentally stays as is, meaning the Feds continue their monetary stimulus plans and don't raise the interest rates anytime soon, right? We have this COVID fear in the mainstream media stay as is, where people are still scared of it, and we still have some economies locked down, but majority of areas are opening back up or people are getting vaccinated, and the fear has been priced in and digested. And then obviously our global stock markets are still going to stay bullish. There's going to be less reason for investors to be pooling money into our safe haven currencies or safe havens overall, like gold, or of course it's Japanese yen or the Swiss franc and the US dollar. And there's still a lot of room for upside because a lot of the positional traders that are in from this low, this is a great long-term investment opportunity for them, just like people who are selling at these highs with the fundamental catalyst. Why would they want to stop with just this piece of the pie to the previous low? As long as they were still Brexit active, there's a lot more financial gains they could get with their short positions or potential long positions they had on the dollar at that time. Do you understand what I'm saying? So that basic concept of buy low and sell high, we can see this demand area and liquidity zone and how investors grab those lows, and then especially where we close with where these actual candle bodies closed, right? You can see us clearing these previous price areas of sensitivity and order block zones and extremely strong bullish price action coming right above those pre-COVID prices, because we've also had Brexit optimism, vaccine optimism, signs of economic recovery, Bank of England support, right? So now we're just starting to see a bit of a slowdown as we approach this higher time price sensitivity area with the candle bodies here. But still, like on the intraday time frames, on the higher time frames, on a fundamental front, as long as we have continued optimism, there's a lot of room once we clear this 1.14 area for upside on GBPUSD and swing trade positions on GBPUSD. And also, even if we were to do a pullback on that intraday bullish market structure, we can start to highlight there's still a lot of room for upside. So pretty much, unless there's any real world fear, uncertainty, or doubt to shake investors out of these positional buys, to shake the institutions out of these positional macro low buys, once we clear this technical area, and especially as Q2 gets going, if we have that continued flood of vaccine headlines and Brexit optimism, there's a lot of room to the upside here. I would only see us revisiting these lows and not being able to break this area if there's a complete reversal with Brexit and that goes back to square one, or if there's like an airborne COVID or complete backtrack with the vaccines. There has to be that real world fear, uncertainty, or doubt. Right? So we understand the structure. We understand where we're sitting at from these macro lows. So that's why stuff like this, when you had these pullbacks, it was pretty nice. And it's not something that is scaring me when you're looking at the price action and the overall intraday market structure that's been respected here, right? really, even if we were to get a pullback to 1.36 here, this would still be extremely favorable swing trade position if we had that aggressive pullback, or obviously once we start to clear 1.4 flat. I can see a lot of continued room for upside. Even technically, I wouldn't see signs of reversal unless we came below 1.34. Breaking that long-standing 8-month bullish structure, having that fear, uncertainty, or doubt, coming below previous historical high positions and price sensitivity areas to the left. I'm going to mark that out here. That intraday structure we're looking at. You can see this bullish structure that we're breaking. Sorry, this bear structure that we're breaking. I'm just going to line this up better here. So basically, we've just been more in this corrective phase here, but it's not like within this corrective phase. Remember, if we get these pullbacks that don't break market structure, even if they're aggressive, or these consolidation phases that don't break the overall bullish market structure, we aren't worried. It's just the way the market behaves. You have to understand that, one, these pullbacks are coming from new highs being printed, or you're having the consolidation phase that new highs being printed. So it's easier to identify that as profit taking by buyers. And two, these, besides the fact that they're not breaking structure, you can see that we get corrected fairly quick as well once the liquidity and order flow is back in the market. And even this area that we're looking at here, it's not like we've seen any massive bearish engulfing candles. It's not like we've seen a break of structure still. Even if we were still to come down to like 1.37, 1.36, there's still a lot of room for upside here on GBPUSD. So I'm really watching for swing trade potentials above 1.14 breakout, because once we can break out of this higher time frame corrective structure, even if we can start to break out of the higher time frame corrective structure, we can start to take earlier buys, in my opinion, and still be valid for swing positions. But still, yeah, if we can start to break out above this area, and 1.4 would be best. One sec. Sorry, just had to catch a quick phone call there, but you guys didn't know that because the recording just got paused and replayed for a second. But yeah, if we can break out of this corrective stage, this is a lot of liquidity that was generated in this area and buyers coming in from these better demanded prices, where once we break out of this corrective higher time frame pullback structure, there is a lot of room for the upside. And especially once you break above 1.404, we're just to 476. Previous price sensitivity areas in this wick area to the left would be almost 900 pips up. You know what I mean? I'm also going to just mute myself and map out some more key levels here as well. But I'm also going to put that swing trade idea alert at 1.4 flat. And also here, if we break this structure, I'm going to put an alert here. If we break above there, it'd be a swing trade idea as well. sorry, it alerted it already. But if it breaks above here, 1.44, 1.4, sorry, and 1.422 even. We'll be breaking above previous highs, looking to extend into new highs. Even if you can catch like 300 to 500 pips on these types of positions on like a simple one lot, it can pay you $3,000 to $5,000 and more. We just have to be patient and hold the positions. But yeah, give me a second. I'm gonna map out some more key levels to the upside quick. Yeah, so obviously we'll do an intraday trade ideas webinar and continue to scalp and day trade GPUSD as well. But I'm going to put an alert at 1.4 above this structure and 1.42 for potential swing trade ideas. If we still have overall market optimism, if this overall bullish structure still gets still is respected, once we break out of this corrective phase, we'll have a nice move at least back to these previous highs to take advantage of and hold. And then once we break above there, we're looking to extend into new highs, right? And continue to play this bullish structure, day trade the waves and scalp the waves, but hold some of these longer term positions as well once we get the opportunities and the price action technical fundamental confirms. Because right now, obviously, we can see that global markets are still extremely bullish across the board, even though they might having some minor pullback phases. They're still just continuously chugging away and printing highs in every region, right? And then our dollar's weakening again, and on the higher time frames, the dollar's still quite bearish. The Japanese yen intraday structure and overall is still quite bearish, So once we break out of this, I know we take advantage of it when we scalp in day trade, but why not on a different account hold a couple of positions lower risk and let them ride? Why not play these waves? It's not looking like it's stopping anytime soon unless we have the fear, uncertainty, and doubt. And the last thing I wanted to talk about is unless we get a break below this order block to the left and around 1.35 price point technically, and we would need to continue to respect this bearish structure with fear, uncertainty, or doubt, meaning we would need Brexit negativity, vaccine negativity, and new COVID negativity. And listen to what I said, new COVID negativity, something that has not been yet experienced or priced in by the markets or investors. This is the only way I would see higher time frame reversals is below this order block, breaking the bullish structure, respecting bear structure, coming below 1.35 flat, and having new fear, uncertainty, or doubt. That's the only way. If that does happen, we'll adapt to that. We'll start to intraday trade and scalp that market fear, but we'll also look to take some long-term reversal positions as well if we have that FUD, right? But other than that, there's no that right now. What I'm saying, that's just potential projections. If there was fear, uncertainty, or doubt, that's just making potential roadmaps. What's currently active, even though we've had this pullback phase, is still that overall market optimism, bullish structure, and buyers in control. We've just had a more aggressive pullback phase, which was honestly needed on GU and GJ anyways, because ever since November, you can see this period was slowly just chugging away to the upside. But overall, still respecting that bullish structure. So I put an alert if we break this lower high and structure to start scaling in buys. I put an alert at 1.4 flat because let me zoom in more. So the break of structure would be showing us continued buyer's momentum after having this double bottom in this area and liquidity zone to the left. while still maintaining bullish market structure, right? So once we break this area, that is showing a lot more buyer's momentum, in my opinion. And then our 1.40 key level also just happens to line up with all of these rejection points to the left where we were failing to break multiple times, right? And still 100 pips up. So that'd be a great scale and entry. And then obviously the safest is above these previous highs. We have to be mindful because we might not have enough order flow to break above those previous highs. I would assume so with all of this pullback phase we had and the amount of buyers getting in at these better prices. But still. So I'm going to save this and send it over. Alert. An extra alert has been added here. An extra alert has been added here. And an extra alert has been added here. If we break above like the 1.39 area. I would only see reversal sells below 1.35. Let me add that here too. GU reversal. FUD question mark. So we'll see something like that in the alert. So we can ask you like, hey, is there any fear, uncertainty, or doubt? And we're breaking below 3.5. Can we take advantage of a reversal? You know? All right, so I'm gonna save that and send it over.